What is going on, guys? Welcome on into today's stream. Happy Friday afternoon on this green Friday afternoon, which actually we haven't had too many green Friday afternoons the past couple of weeks, past couple months, this year even, right? So what the heck is going on today? We'll talk about a bunch of this stuff. We'll cover some in tomorrow's video as well, a little bit more. But essentially, to start us off, we got this article that dropped this morning. Fed set to raise rates by 0.75 basis points and debate the size of future hikes. Some members are saying that we should probably pause and see how things are going, and there's concern there. Here we go. Enter the pivot talks. Essentially, that's literally what is being tossed around, and that's what the market is somewhat absorbing today. So that's what we're sitting at. Pivot talks being tossed around there. Are we at the highs of the week? No, we actually were higher back here on the 18th on Tuesday, briefly, and then dumped off, bounced back, fell back off. But we're up towards the highs of the week around this 375 or so on SPY. We'll have to watch up towards 378 to 380 as the next spot, maybe into next week. But we don't really have too much until the next Fed meeting, which is going to be on November 2nd. So we got about just under 2 weeks until that. So this could give us a little bit of a runway into next week for some upside. So that's at least what we're sitting at, what we're looking at, how we're feeling right now going into next week. But that's where we're at. Tesla right now, let's take a look at Tesla. After the earnings, a lot of interesting earnings this past week for sure, but Tesla's bouncing up. So Tesla ended up pretty much holding like the low 200s off the earnings. And then, today, again, same deal. And then it's actually holding up and really good. There'll be some resistance up around 220. So it's still got about like $7 to go for, that next true, big time resistance, I guess, based on this chart. Volume resistance right there was up there for quite some time over the past couple of weeks. So we'll see if it gets up to there next week. But that's the setup on Tesla. Outside of Tesla today, what's a big mover? S&P, Qs, IWM, the Dow, they're all up about the same, around 2%, give or take, across everything, pretty much today. We have look across the board, and Apple's up 2.5, Tesla's up almost 3, AMD's 1, Amazon's 3, Microsoft 2. Affirm, look at this, Affirm was down a lot. Now it's actually up flat, believe it or not. ARK, Kathy Wood's up about 1%, Biotech's up about 1.8, almost 2. The semiconductors are up pretty nicely today. Oil's down, but oil's flat. Natural gas is down massively again. Natural gas has had a just flush city of a week. We talked about this one on the live on Sunday, and we saw the bear flag. We saw the bear flag setting up, and if you played the bear flag, you had a massive, massive move down. The risk here would be, you can enter on the break of that bear flag. The risk would have been up to about $697. You didn't want to see it getting back above there. Again, it could have come up to like 720. The tops are here, but that was a really nice play to the downside there on natural gas. Was thinking that maybe we'd get a dump down, then a retest to pull back up, but we never got that retest. It pretty much went straight down the entirety of the week, which is kind of crazy. Decided to clean up the account, didn't touch the TQs, sold some stuff. TMF, I like the TMFs, man. Deep in the money's 2024s. That thing has gotten super cheap. I actually add a little bit more in my Robinhood this week, like 25 more shares. Which, by the way, here it is. I'll show it. We'll show it tomorrow in the video like usual. But here's the Rob. We have a TQ put for next week, just in case as a hedge. I actually sold one of those for some profit this morning, and then holding this last one. All these covered calls I sold will expire worthless, so that's essentially free money in the account over the past week or 2 weeks whenever I sold them. But not much, not too much. Silver's doing pretty good today. Can't complain there. I think 2 weeks from now, we'll get the JEPI dividend reinvestment, which is going to be about like, $40, $45, which sounds like nothing, but that's actually pretty cool that you're going to be able to cash flow just from one stock alone, $45 a month from a 6K portfolio. It's pretty good. So that's where we're sitting at. Labu stock sold, didn't really touch much of those, so we're chilling on those. That's really it across that portfolio. I didn't really do too much there this week, but we cleaned the Weeble out, so now we're sitting all cash. And this guy, 8K, I'll talk about that one tomorrow as well. 8K, and we're sitting here at 8K. I put $100 into a TradeVikit account for futures, so we're going to see if we can get that set up, connected to TradingView and test futures out, play the micros and see, if that's something we actually like. Have never really tried paper trading a little bit, but we we'll see. I kind of like futures because you can kind of watch things and things kind of go nice and slow. Generally speaking, the volatility of a day like today, even in the market, is kind of a whipsaw action. Yesterday was kind of clean. I had some small account plays yesterday that worked out pretty well, pretty clean. Bear flags to the downside that I actually played. But today, kind of a whipsaw action. You had this. Actually, I did have a VWAP bounce play on the small account, but got stopped out. Not in a bad way. We just got stopped out because we came down with a 5-minute close below VWAP. But if you look at that was also breaking down below some of the key or some of this volume. But in reality, I guess technically you could have given a little more down to the lows of Wednesday. But then it kind of, this is what markets tend to do sometimes, not sometimes, all the time. You'll pull below the VWAP, bounce around a little bit, and then you'll have that to the upside move. We ended up getting it, but, who gets stopped out here? So the best way to do it is kind of let it come down, let it do its thing around VWAP, and if it gets above and starts to trend above, then a pullback entry above that VWAP is probably a better entry anyway. So you probably could have got, looking back myself, I probably could have waited instead of trying to play the VWAP bounce, somewhere in here, and then, didn't hit the target, fell back off, and then get stopped out. Could have waited, see what it did, and then when I saw this wick get bought up right here, in a perfect world, that would have been a better time to play it. But at that point, we're out of cash for the small account, so couldn't play it and had to watch. And it is what it is, but that was the deal there today. It was a decent week there. One red day, which was today, but still a positive week, so nothing to complain about, I guess, on that front. Didn't execute great today. Mentally, probably wasn't in the best mindset of it all, but at the time, it is what it is. Snap dumping or Snap dumped off earnings last night. Yes. Are they still down a lot? Let's see. Snap is still down. 30%. It's come back. It was down more, but it's sitting down here. It's funny enough. This is again a good. I guess in hindsight, it was good. It was a good thing to do. Not that Snapchat is. I don't necessarily like it, to be honest. Do I use Snapchat? I kind of do sometimes, but not really, not as much as I used to a couple years ago. But the reality of this is that I was in Snapchat. I actually made money on Snapchat. I forget when I bought it, but I got an average in the 9s. I think I actually ended up buying it after the last earnings dump. So somewhere in here, believe it or not, kind of lucky almost, because at that point in time, there was no support, to play off of. We weren't, we didn't have much history there. And then I sold it, somewhere back in here, 10 something. So it was I guess a green trade off of just the shares. I sold covered calls, so I made a little bit of money off it in the Robinhood, I guess. But I got rid of all individual stocks 2 weeks ago in the Robinhood because I'm sitting here I don't want to have any individual exposure in earnings. I want none. I'll have ETF. I'll have 3x ETFs for leverage or for, the little bit more upside. Don't want to have option positions in here, right? And I just don't want to have individual stock exposure because, again, could the market actually do decent? Yes. And you'd think, oh, well, my stock should be up. Well, in this case, market's up 2% today, and guess what? Snap had bad earnings they had bad earnings, and they're down 30%. So it's do I want to have that risk? No, I'm good. I don't need to do that. So you have to think, it's oh, okay, what's the point? Not that would be huge, you'd be down $250 off of 100 shares. It's nothing crazy, but just don't want the overnight or don't want the individual stock risk. So Snap's crazy though. If you look at Snap, my goodness, talk about just a beast that got absolutely destroyed. $80 stock, literally a year ago. Literally a year ago, this is an $80 stock. That's nuts. That's just insane. So see what can happen in a year, right? You look at what these stocks have done in a year to the downside. You look at what, stocks prior to that, prior to the downside moves have done in a year to the upside. You can do a lot in a year when you take a step back and think about it. Let's take a look at SPX. How does she look? This looks, to be honest, I have to say, outside of earnings next week, I actually have a bullish engulfing today. It looks like outside of earnings next week, we could have just like last time, we could get a good rally, here the next week or two. Very similar to that rally that we saw, in late June into early July into August when we had a lot of earnings back in that time frame. So we might be setting up with something similar. And to be honest, the charts aren't the same, but it kind of reminds me a lot of this rally, right? And again, what are we hearing? We got pivot talks from the Fed, right? Wall Street Journal comes out with this. We got pivot talks from the Fed already. So you kind of can see, right, the writing on the wall. If we're going to repeat something similar, the setup is potentially there. You're going into that same earnings, cycle, same, time when everyone's worried, all these big companies, what if they report bad earnings, right? So how much is priced in the past 2 months anyway, right? I don't know. It seems like market didn't really care this week of, Tesla, Netflix did decent. Snapchat got hit hard, but the market's like, screw Snapchat. Who cares? We're up 2.5%. Doesn't matter. But we had a lot of chop. There was a lot of just like ups and downs and choppiness, right, over this span of time from early June to early July. We didn't really move too much, right? We undercut the May lows, not by too much, kind of chopped around, and then eventually went on a nice rally. What are we seeing right now? We undercut those June lows just this past month in October, but we're chopping around. Like, we haven't had too much action, and now we're about to get some earnings behind us. We may very well have a nice little rally here, maybe 3,900 across SPX. Dare we even say up into the fours? I will see, but we might have some legs to this going into that next Fed meeting. We'll see what Powell's going to say, and dare we, he doesn't want the market to go up, but dare he says anything of the, any concerns about pausing or, the tightening being a little too much and them kind of giving things some time to breathe and wait. Anything like that said at this meeting, market's probably going to take that and run with it. So that's where we sit as we speak right now. We're going into the end of the day or end of this week. Yeah, snap. It sucks, but it is what it is. Here's the 10-year. Take a look at this. So we had that. This is something that I can't believe that we're first off here in the first place. But I guess you can believe anything. But this is up there to hit up to 4.335%. Now it's around 4.215. This needs to come down, obviously, if you want to have legs to that rally. The thing is, though, we're seeing this kind of disconnect a little bit, where we're actually not like we're up. Relatively speaking, we're up a lot on the 10-year, just yields in general. But the market's actually kind of holding up better than we think. Now, it's not ripping to massive new, bounce highs, whatever, but it's holding up pretty good with higher lows. Like, we're seeing decent action on it, relatively speaking, despite the 10-year being this high, which is kind of impressive if you ask me. So last time the 10-year pulled back, we actually had a bounce on October 4th and 5th or 6th. That span of time, market actually rallied up. Guess what? The days prior to that, the 10-year came down. But now that's the opposite, and we're actually kind of bouncing. So today's 10-year is actually technically down today, but still, over the past week, it's up a lot. So that's where we're sitting at. Ape, I have not looked at Ape, to be honest, ever. But let's take a look from a technical perspective. Nice little V-shaped rebound. This area actually will be something. This is something we're at right here, because we had, if you look at it, we tried to kind of consolidate. There's not much there. A little bit of volume up to about 275 or so is where we're sitting at right now. If it gets over that level, 315 maybe is a spot. I don't know. You obviously broke the downtrend. You're seeing decent. Here's a pretty steep downtrend. You broke that, so you're not getting a decent, recovery to the upside. I don't know. There's not much price action to go off of. So, unfortunately, there's not much to kind of, dive deeper into on that. Pulling up DX. Well, look at this. Let's look at the VIX. VIX coming down again. DXY. This is what we're kind of the question, right? Is this going to happen? We had a looks to be a potential false breakout here. So look at DXY today. Jump over here. What's this? This wick on the daily. Each of these candles is 1 day. This is the dollar index, and dollar coming down, gold, silver will go up. Generally speaking, market should like that. That's essentially what you need to know. Does it mean that the market has to go up when the dollar comes down? No. But generally speaking, dollar down, market should at least have one of the headwinds, maybe turning around as a tailwind, or at least, that wind is dying down, right? That's all we can say. So we'll keep this in mind, but this looks like it's very, very weak and it wants to break down below here. So that might be an opportunity into next week for maybe at least a pullback to here, 50 SMA. It's bounced at that 50 SMA every time pretty much this year. So that's going to be crucial around 1050. It's about another $1.25 to the downside on DXY. And then we got that level to watch. Pretty big level on DXY. So back to SPY. Look at this new high. We're actually getting close to the high of the week. Boom. Look at that. Look at that rip. This has been one of those days where, to be honest, you can see we're in that mode of like just squeeze out Friday. We haven't had it very often or very recently, but when we get it, we tend to get some nice, and they're pretty slow, clean. You know, if you're futures trader or even options, sure, they're kind of slow. So maybe futures is best, or you're buying, next week options or something like that. But these are some pretty clean moves. Look at this. Pretty clean, area. We had this zone that was resistance up on SPY earlier. This is the 1 minute chart, so kind of zoom in to see it better. Multiple touches here up to about this 372. Guess what? Low 372s is held up as support past, hour or so. And now massive, rally to new highs of the day. Just like that. SPY's up almost 2.5% as we speak. Treasuries just over here. The 10-year, the reality is the world, literally the world, and US I'm sure is not going to be immune to this either. I guess you could, but literally it's going to be very, very interesting to see how things would function with rates this high, given the current stance and the current dealings of debt that everyone's got. So you want to talk about the debt, record debt, the U.S., other countries now at a fat rate to that, fat interest rate. I was just talking about this today, and you think about this generation. It's actually funny when we talk, because we're talking about the student loan. There's this whole article with student loans, and someone I think in Wisconsin came and was tried to stop or send a thing to the Supreme Court to tell them to stop the student loan forgiveness plan, whatever. But the whole student loan thing, people don't realize is that a lot of people of this generation who have loans, the reality is that not only is education a lot more expensive. This is kind of just one of those things. There's a lot of situations that are similar. Not only is it so much more expensive, obviously you can make the decision to not go or to go to an in-state or go to a cheaper school, right, community college or whatever. But it's so much more expensive. So kids are getting out of school, and now they're met with the highest rates of their adult life. I guess rates technically were up to this level, but you got to go back to 2010, 2007, something like that. You got to go back way back over a decade. So, and they were kids graduate now are 15, 10 years old, right? 25-year-old people now who have, coming out of school with $100,000, $200,000 of debt, but now you slap that on top of, right, rising costs, houses, right, or, expensive. Things are just generally expensive. Schools are more expensive anyway than where they were, literally, 2-3 decades ago. It's drastic in terms of the relative, income to whatever ratio. Then you slap on these fat, massive interest rates. It's a completely different landscape nowadays. And so now in a lower rate environment, maybe it wasn't as bad. School prices they're going up, education's going up, but at least, rates were low. So you can get a decent refinance. Now it's you want to refinance? Well, you're getting rocked on that refinance, especially if your credit's bad. So it's kind of crazy. Shorten CMI hitting, shorten for. This is a pretty interesting move, man. This is a pretty 375 is coming here on SPY to finish off the day. Closing squeeze out is what we're looking at now. That's a pretty big extension on the 5-minute chart too. My goodness. TLT is bounced. Not really. TLT kind of just sitting down here. It's funny. Getting destroyed. I still like the TMFs, but it's still a 6+ month hold. I have no reason to sell that, and for a long time, really for a long time. Could be longer at this pace for all we know as we're playing out. But look at this silver move in gold and silver. Gold's up about almost 2%. Silver's up. Silver's going to be more volatile than gold. Silver hitting a high of the day. Look at this silver bounce. So silver pretty much Now you got a very clear area, okay, defined, pretty clear. This is the spot that's got to hold. Okay, you know, when you lose 18 on silver, I'm gonna be out. I'm in, but I'm out. We lose 18, I'm out. So pretty simple, but again, it's gonna be, you know, pretty much a big player will be the dollar in watching this. And if you're gonna trade silver, gold, whatever, like you pull the dollar up with silver and gold and trade them, like you can see the correlations are perfect. They're really nice. So something to keep in mind. Student debt relief will be a big relief, but I don't see it being good. I mean, it's not going to be for inflation. I mean, I don't really know. I don't know how big of an impact it's really going to have. I know it's a lot of spending from the government, but like they're spending a ton of money on a bunch of other crap too, that, you know, whatever. And the reality is, okay, well then people are going to be in a less difficult financial position, so that makes it easier for them to spend money. I don't know how much 10K really does. I guess in the grand scheme of things, for some people who have, you know, fairly small loans, it's actually a big help. But for people who have 100K, you know, you go to an out-of-state school these days, you get 100K debt is like, you can get 100K debt, no problem. Like you're easily 100K. So it's not like a big deal for them, especially after now you got to go start paying a fat interest rate. Yeah, you might have taken 10K off the top, but I'm going to pay that 10K, maybe 20K, 30K back in interest anyway on top of what I'm going to, you know, it doesn't matter. So I don't know. At the end of the day, that the environment of the higher rates is really, really interesting, but it tells you, or it tells me at least, like, I mean, we got a completely different landscape here, because this is something we have never seen, or we haven't seen, right? And then plus the amount of debt that people have, number one, and then number two, just the country and just the world has, you know, with these high rates. You can see things are breaking, as we've been seeing what's going on in the UK, other countries. Things are starting to break, and I think that's also potentially why the Fed is starting to look around and say, you know, well, let's see what we can start to massage in, or, you know, mention the hikes, or mention the potential that we might actually pause or whatever at some point earlier than, you know, expected. But they want to do this in a way that the market doesn't rally. And if you look at the market today, well, market says, you know what, we're going for it today. We don't care. So you had a pretty big squeeze out day today. Although this morning, we were saying before, this morning did not look good. You're pre-market hours. You woke up pre-market today. You're like, oh my gosh, we're down about 1%. Well, we ended up finishing the day now up about 2.5. At least for now. I got 30 minutes to go, but that's what we're sitting at now. So the question the question and the things that you've been maybe see on social media, some people have been mentioning, is that the rates that we're seeing now, like legitimately the world cannot function, right? So it's not going to happen. So the idea is that, like, yes, it's scary, but the reality is that it's not possible. It's physically not possible to stay this high given the debt, given all this stuff that's going on. So the bet is on, I guess, on bonds, right? Yields coming down in bonds, which then in turn, right, probably does decent for stocks, generally speaking. I don't mind the debt forgiveness stuff. I don't agree with the degrees and things like, yeah, no, I have probably one of, well, we can talk about it now, because, you know, we're kind of just watching this little almost melt up of an afternoon. Like we're just kind of just gliding higher on the S&P right now, you know, squeezing out is what it is. But when I made the decision, so I was 17 years old, right? Going to high school, senior year of high school. I applied to colleges. My high school in Connecticut was in Fairfield County. If you guys know, it's like, you know, suburbs of New York City. It's Southwest Connecticut. It's a pretty, you know, well-off county in general. And so you go to college. You're taught, right? Teachers, parents, students, like everybody. You're competing to get into the best school, right? And that was just the environment. What did I know, right? What did my parents know? I don't, you know what I mean? They want the best for me, right? So you're in this environment, and now you have to make this decision of like, okay, I'm gonna go to school. I could have gone to community college, or I could have gone to an in-state, right, for way, way cheaper. I actually could have gone to other schools out of state that I had decent scholarships to, way cheaper. My stubborn ass is like, no, I want to go to Penn State because the program I wanted to get into and was the best or whatever, and all this stuff. And so I go to Penn State. What does that mean? Out-of-state tuition, no scholar. I got some scholarships that I applied to afterwards, right, to get a few few bucks here and there, but I paid a crap ton. I have debt, but it was the stupidest looking back. But I was 17. What did I know? The stupidest financial. You can look back and say college was, waste. Obviously, that's one thing. Like, yeah, the friends, the experiences, like that was pretty fun. Like that stuff was awesome. But the financial decision, horrible. I literally look back on that and I say to myself, I really, really, really wish I never made that decision. But you can't go back at this point in time. So for me, it's like I have 3 triplet siblings that are now in college. They're all in their sophomore years. And 2 of them are kind of going that route. One got in with a scholarship to another big school. And other 2 are pretty much going the route of community college to in-state schools down where they moved. And they're saving a ton of money. They're still going to pay, but it's so much cheaper than what I had to do. And, that's where I kind of see things now. If you want to go, try to do it as cheap as possible. Because, at the end of the day, the name brand is cool and all, alumni base. They sell you on that crap. At the end of the day, it comes down to you making the connections, right? Doing the dirty work, getting the internships, getting in front of the right people. If you want the job here, or you want to go there, or you want to go, that's what it comes down. It's not that the school name brand is automatically going to magically give you a great job. No, you have to still do the work. If you don't do the work, nothing's going to happen. So that's essentially, my whole take on it. It's, from my perspective, the stupidest thing I could have ever done. But at 17 years old, right? What do it sucks looking back. Yeah, it sucks. And you're in the environment of everyone's doing it. And it's like, well, if I don't do it, then I look like an idiot. But that was just where where it came from. What did I know at the time? So it sucks. Ups and downs. Why everything's up? So everything's up a lot today because this morning in pre-market, it actually was looking pretty nasty. But Fed is set to hike rates right at this next meeting in about a week and a half, 2 weeks. But the Wall Street Journal comes out, and their whole point is that, or not the whole point, but they started to kind of tease the idea that some members of the Fed are like kind of concerned about the rate of hikes and think that they need to tone that down and potentially just pause sooner rather than later, and just to see how the economy digests these hikes. Because they're concerned about, again, like we've been talking about for months, they're concerned about these lagging numbers, housing numbers, all these inflationary numbers that have been staying high, but as you dive deeper into the system, they actually are lagging. They lag the way that the CPI is created. They actually lag, and they're meant to lag pretty hard. And so the Fed is essentially they're driving policy off of lagging indicators. That's essentially what you have going on. And so they're starting to say, you know what, from other data that they're seeing, numbers coming down across this or this or this, they're like, maybe we should probably pause or slow down let's just see what happens. We can always kind of continue on, in a couple months, just see what happens. And, if we did our job and we did too much, then at least we don't, make it worse in the short term, and then have to kind of make up for that, 6, 7, 8, 9, 10 months down the road. Like that's kind of the concern. And that's why things are up. So you have the thoughts and the idea of a pivot being, tossed around again. That's kind of where we're at. So, yep. Daughter got paid to go to college. Yeah, my brother, a similar situation. He, I forget how exactly it works, but he got a scholarship in-state, and then he had some AP credits, and he literally, his first semester, he got paid to go. Like, it was pretty cool because he was able to live at home too. He didn't have to pay for housing. He just drove in 25 minutes away, whatever it was. And, it was pretty cool. I'm like, that's the way to do it. That is the way to do it. So we haven't seen these highs. No, we have. 2 months, man. 2 months. You got to go back here. Let's take a look. 2 weeks probably. We were actually higher back on October 5th and 6th. We were higher. We're up toward 378, 379 on SPY back then. A couple months ago, you're back up to 430 on SPY. So it's a completely different spot. That's the next spot to keep in mind. Big spot will be up towards 390. And then after that, maybe this 400 will be next. So we'll see if we get there. I think the 200 moving average will probably be a pretty good spot to keep in mind. That's right now at around 412. That will keep coming down day by day. But, that might be somewhere around 400 in a couple of weeks, and maybe we're actually going to be there, on a rally. That could be where we are. So we'll see. But, that's the thing with the 200 moving average, too, you have to understand is that this 200 moving average, because it's taking into account the past 200, candles, in this case, 200 days, right? It slows down and starts to kind of round the turn. But because we've been going in this, the longer we're in this downtrend, the steeper that and more aggressive to the downside that 200 moving average is going to be. So it was actually a lot more impressive to test that 200 moving average. That rally was really, really strong to get there back in August. It actually wouldn't necessarily be as strong of a rally maybe to hit it this time, because that meant from the lows to the moving average was about 19% bounce. From where we were, I guess on the lows, that was a pretty extensive move down. Actually, look at this. So if we were to go straight up from here in the next 2 weeks, right, we'll intercept that moving average at 408, 405, something like that, right? We'll be about a 16% rally off the lows, which, by the way, we're barely even at those lows. That we were there for seconds, it felt like, on the CPI release. So you see what I mean? The moving average, the 200 moving average, is actually not as impressive of a rally from these lows, if these are the lows for this next little rally, which maybe there's more than people think. I don't know. But it's not as impressive because that moving average slowly kind of rolls over. It's still factoring the past 200 days. And now, because we've been going down for so long, we've been, downtrending, we've been more aggressive to the downside. That moving average really, that steepness starts to really kind of, that slope gets a lot steeper to the downside. So from here, it's only about a 10% move to get to that moving average. Not that far off at all. A couple weeks away, realistically. Or a couple good, earnings away. That's what it could be. Fund speculators increase S&P net short positions. Still a lot of people shorting this. A lot of people want to short this. Put call ratios. What are we looking at? Put call ratio today. Put call is at 0.94. It's still a lot of puts. It's been very, very high. It's been very elevated. You guys, we've talked about this before. Not sitting here trying to say, and I'm not selling you on anything, right? But the potential for a serious rally, right? Talking about a rally back up to 400 or so, maybe higher, is very possible, historically speaking, given what we've seen, over the past decades or, more than that, even, past bear markets. You talk about sentiment. A lot of indicators are down to pretty low levels. Does that mean that we have to rally now? No, we could sit around here for a while. All that really means that, generally speaking, it's generally a decent time to buy. Maybe better than a decent time to buy, but we'll see. Talking about haven't seen these highs in 2 months. Talk about the indices. The indices are the same thing. SPX. We were 2 months ago. We were talking about August, right? That's way up here. NASDAQ 2 months ago, same thing, way up here. Dow way up here. We're still, actually the Dow looks really good. The Dow looks really strong compared to everything. The Dow is back to highs we haven't seen since about a month ago, mid to late September. We were here. So the Dow was really strong. Dow's up 2.5%. Pretty good. Look on the Dow there. 200 moving average. It does look like a decent spot. Yes. We shall see. But yeah, we'll see if we get up there again I'm sure we'll get there at some point, right? But we'll be up there relatively soon. Played calls this morning, playing puts in the afternoon. Yeah, I had calls on SPY. Let me see what the small account was at this today. What did I play? I had all calls, believe it or not, and they all lost. Believe it or not, I started off with TLT at 9 a.m. And then, they were all losers. TLT ended up not actually moving as much as I thought it could move. Let's take a look at this 5-minute chart. So TLT, what I was looking at is, I think I bought this bounce, and I was looking for a gap fill back up to like yesterday's lows. So I was targeting up here, and I got stopped out below VWAP essentially. So that was this, and it flatlined all day. So I guess it was good that I got stopped out because I didn't really do anything. It wasn't like I'm looking back at TLT saying, "Oh man, I missed it." No, it never actually happened. And then I had two SPY plays, and I think they were both essentially around this area. The problem I think I had on them was I probably bought contracts that were a little too volatile. And so I kept to a pretty decent risk of like, 10, 15%, and it hit it pretty quickly on these. We had a pretty choppy morning, to be honest. Compared to yesterday, it was a lot more choppiness this morning. We're kind of slowing down now for sure. But this morning was very, very choppy compared to like yesterday, which didn't feel like it was as choppy. Kind of a slower day. Today was a little bit faster pace this morning from at least what I could tell. Maybe that's just how I felt. I don't know. That's just, me. But yeah, we kind of had, I guess, the fake out below the VWAPs and stuff. The better buy was the second dip, the secondary dip down here, as this dip held a higher low, or even this candle holding a higher low versus that low. That would have been a better buy looking back. But sometimes, you jump the gun a little bit, which I didn't do. I was doing a really good job earlier in the week of not doing that on the small account, but then today I kind of just, not threw out the window, but kind of just jumped the gun is what it really was. Not necessarily on purpose, but not doing the same things I did yesterday or the prior days. 20, 30%. No, that's pretty good. That's pretty good. I had I had an SMH call I got rid of a few minutes ago, or just before the stream from earlier today. But it actually went a lot higher. Jeez. I was checking on the Robinhood account. How much is it up? It's up almost $300. Pretty good. But the thing about the Robinhood, though, look at this Jeppy. I'm really excited to get that dividend, start playing the dividend here. Oh, wow, I didn't know I'm up $100 on that. That's cool. This is going to be a lot safer of a stock. Actually looking like a really nice bottom being carved out right now. The thing about swings, as I said earlier, the Weeble account is resetting, or I'm not resetting. I am resetting it to a cash account at $8,000, and the idea is that anything over 8,000 at the end of the week is what I pay myself, and that's it. If it's under 8K, I don't get paid. Essentially, that's how we're gonna play it. So I had to sell everything, and then have to wait like 6 business days or so to get the account to swap. So we're waiting on that, and so in the meantime, whatever. But if you are looking at it and saying, hey, I like trading, the S&P or whatever, you can trade futures. I've been not messing around, but I've been testing out trading views. Trading futures on TradingView a little bit. Let's see if I can do it. Let's see if I can pull up the micros. So just look at them and just show you an example. I have my TradeVikit account, but I want to get this let me go to paper trading. Just so you can see, because I'm still waiting on that money to officially settle in there. TradeStation or TradeVikit, I think, are two solid ones in terms of, I believe, from all that I have seen. But here is the micro. So each 25-cent tick is $1.25, I believe. And if you play the minis, each tick is $12.50. So you can see, you can scale it up however much you want. But I think it's pretty fun. Let's just say that, I'm just going to kind of not gamble, but let's just play, let's play 2 units right here. If I'm going to play 2 units on the paper account, I'm in. You can kind of see, let's just watch this play out and see what I mean. So I have the order entry. It's kind of like the ladder, right? Almost in a sense on the right-hand side that you can kind of enter, limits, sells, buys. But now you can see that I have 2 units. So every tick is, because I have 2, every tick is going to be about a $2.50 move. So it's kind of fun if you think about it. And there's no PDT restrictions on this. So I think it's pretty cool. But if you do like playing, after hours, pre-market hours at night, some people can only trade at night, and they're like, I can't trade during the day. So maybe futures are the way you do it. I don't know. Like a risk off. It did look like risk off. A lot of tech, was down, but it bounced pretty hard. 20th calls AMC. If this continues, if this strength continues into next week, then those should do good. 35 cents per. Not bad. Not too shabby. But yeah, so like this is going to be, I was playing the not the micros, but the micros is what I would play if I'm going to start trading the $100 account essentially to test things out. So you're not risking, and just one, you'd be playing one lot. You wouldn't be playing, multiple units, at a time, because you can see how fast this moves intraday. In the after hours and the pre-market, early pre-market, not as fast, not very fast, but this does tend to move pretty quick. So you kind of have to be, you can't be sitting here and say, I'm going to take, a crap ton of contracts or whatever. But the reason the reason why you like this, there's fees. So there are fees. They're not that bad, but there are fees. But if you think about it, like from a perspective of, I don't want to deal with any theta decay and BS, like you're legitimately just trading the price action. So there's so many times where you get in options and like the option or the stock, let's just say the stock moves in your favor, but the option is flatlining or the option didn't move. Why? The VIX comes down or there's something else or the time decay gets you. So that's why futures interest a lot of people, I think. It's simply just playing off the price action. You don't have to necessarily worry at all about time decay and all that crap. It's pretty simple. Pretty simple. So we'll come back to this and see how we're looking on that guy. But it's on a paper account to test things out. The account should be approved by next week. It should be Monday. It should be approved. Rivian. What do we got on Mr. Rivian here? If you're looking at a risk on play, this is definitely one of them, and it's holding up a lot better, higher compared to where it was earlier this year. It's got a really nice higher low. If that low holds around, $29, there's just under $29, some decent spot. It's got a bullish engulfing, looks like today, almost. Not over yesterday's high. I think it's close though. No, yeah, it's not there yet. It gets to engulf the entire wick. It's engulfing the body, but not the wick. But yeah, when it comes down to it for like risk-ons, Rivian, I like Affirm. Affirm is my favorite. AFRM. It's my favorite. It's like my go-to. So I keep a list of like on this watch list of like just a bunch of names that is like, okay, if I'm looking around just to see what's happening today, like these are going to give me a pretty good story of what's going on today. Affirm is one of them that like I will trade it sometimes, as that risk on name. And if we do go, and it's not like, look at it now, like look where it's at now. It's down off the lows. Like if you want to bet that next week is a rally week and you think that we have a risk on week, right? And the markets do really well, you can take Affirm calls, and Affirm can be at $21, $22 in no time, like one day, 2 days, like we saw it do, back in there. So something to keep in mind. But yeah, I like to keep a couple of those stocks on the radar just in case. XBI 2.5% today. It actually broke down below this level. Not the reason why, but I got out of all swings this week essentially at break even. TLT stopped me out, and then the rest I just took out at break even. And technically speaking, I guess I'd be up on the Soxel swing. I would be up on that, but I have the shares of Soxel and Labu in my Robinhood, so there's no FOMO there. I don't really care about that. But that Soxel, man, looks pretty good off the lows, building higher lows, looking a lot stronger this past couple of days. But I felt much better with cleaning out and just playing. We'll be playing from a fresh slate. Not have to worry about overnights and any of that crap going forward in the Weeble. Silver is sitting here up about almost 3.5% on the day, which is kind of interesting. So it held 18. So I was looking at 18, and like if it doesn't hold $18, I'm out on silver. And what did it do? Like, what was this, on the 14th? Last Friday, it got down to 18 and it actually held it. So we stay alive another week. But it's not a huge risk. I got in somewhere in here. I look at silver and I say to myself, I'm not looking at silver as like a quick trade. I'm looking at this as like a dollar comes down and silver, reverses up to, in mid-20s again type of deal into next year or beyond. As long as this area holds that it's at. Could have got faked out. I guess you could, right? Falls under 18 and wicks back up. I'll give it a day or two to close under 18. It's got to close under 18 to get out, but we stay alive for now. Let's check in on this. Oh yeah, I have this position. So you can see, okay, let's go back to this. Just kind of use this as an example. So on the paper, right, we have these two contracts that we went long, right, on the micro S&P futures. Now they're down, I don't know, where are we? Where's our average? Our average here is at 37.6650 and we're at 37.63 or 37.64. So we're down about $2.50 and see how we're down about $25. So it's really not a super scary thing. Obviously, if it's super volatile, it could be scary, I guess. But it's not a scary thing, especially just taking one. You know, you take one contract, you take one lot, you're good to go. I mean, it's in terms of playing this, like it's, and it's like playing SPY calls without having to worry about any decay, like none, no decay, just SPY calls, like it just playing futures. So that's kind of an interesting take on it. Spinning thing of death. Oh yeah. Sometimes, I mean, I've been having some problems. I don't know what it's been. My girlfriend had an interview the other day and the Wi-Fi went out and she was like mid-interview. But yeah, hopefully, I mean, I've been having some streaming problems really, actually. The thing is, at the new place I'm moving to in like 2 months, it's like Wi-Fi by the apartment complex. I don't know. It's a brand new complex, so I can't imagine it's going to be like crappy Wi-Fi, but I mean, we paid for like the AT&T, like the biggest, best one you can get, I guess. It was like, you know, I don't know, whatever it is, but we don't have any control over our Wi-Fi, essentially. It's going to be up to the mercy of whatever the apartment complex has. So hopefully it's not a problem for streams. I don't think it will be, but we'll see. $18. Yeah, that's the line in the sand. So if you're looking at silver, I mean, if you're going to play silver long, you know, you want to go long silver, okay, that's fine. Just what I would do, go back, just put an alert, and I'm going to make sure I have it here. I think I have one on my other account, but I'm going to add an alert there. Give me an alert if it crossed below $18. That's it, just so that I know, and I can check back in if I need to. Another thing that's really cool, about if you wanted to, like if you're people who truly like the small account challenges, obviously with options you can do small account challenges and 10x your whatever if you get lucky. But if you do small account challenges like true small account challenges, like if you do it on futures, because there's no PDT, like you can actually do a small account challenge and just take 1 million trades. Obviously that's at a massive risk of you over trading, like massive risk of over trading. But if you take 1 million trades in a day, you could technically be right on most of them, let's just say, and grow a small account like very, very fast on just playing futures. But realistically, you'd want to be playing, higher quality setups, bigger picture plays, not just like scalps, because you're not going to be able to, you can only do so much on scalps unless you're going with a ton of size, and there's not really a need because you're going to get leverage anyway. So this is like an example of like, should I have actually held this the whole way? No, but I wanted to put it in to see how the minis would go, because I haven't with the micros. I've only been playing the minis, not the micros, on this paper account. So I'm testing out the mics for potential next week adventure. Well, that's a pretty good wick. That's bouncing right back up though for now. We're kind of just flagging out again. It looks like. Seems like we're flagging. Last 4 minutes to go until the close. What's gold? Gold's up about 1.5%. TLT, man, still down on the. I mean, obviously it's down on the day, but still not looking good. Gonna take its time, take its sweet time. Put calls at 95 roughly. Look at DXY. DXY under 112. Pretty impressive on DXY. Here's oh look, I know the screen is like I made it like super small, but if for those that are tuning in now, we on DXY, the dollar index, I think you had a false breakout this morning. I think that's what it was. We'll see. Obviously, it can bounce here and hold up, but that area at 114 is your false breakout zone. Going to be interesting. Yeah, I mean, they're not. I don't think futures are, to be honest, that difficult to learn. It's just a slightly different style, and the fees can add up. So again, that's another thing too. Like we're saying, like if you're doing a small account challenge with futures, like you can do that, and it actually might be easier on the micros. versus doing just SPY calls. Essentially, that's what I've been doing. I've been playing SPY, puts, calls, IWM, like just playing the indices, playing maybe an individual stock here and there, but not very many. But yeah, I mean, the fees add up. So if you're going to trade a million times, there's going to be, no, not huge, but if you're going to be taking, $2 profits off of like, small account plays, 25-cent fees here or 25-cent there, like they add up. So, as long as you got some good risk reward, 2-to-1 risk rewards, generally speaking, it's not a big problem. It's just essentially cost of doing business. It's not a huge deal, but something to keep in mind. So yeah, also, by the way, too, on the S&P, we're pretty much up into the highs of this week. So this is, would be an area I'd look at as resistance. For a real small account. No, yeah. And especially if you trade micros, you don't need to have, it's like usually like $50, like depending upon the broker, $50, not very large accounts needed to trade them. Let me just get rid of this. So there's an example. So we're down, like, I don't know what the number is, but I essentially bought high of the day. I guess I could have shorted it instead, but bought high today essentially. Now the market's about to close. Not that it really matters, but what I can do is I can add a stop. Let's see if I can I can just drag this stop loss down and put a stop loss at low of the day. And it tells me, hey, I'm going to lose $70 if the stop loss hits. Pretty cool. And I can take my take profit and say, hey, I'm going to take profits up here if that hits. It's really, TradingView is really cool. I like it. I like it a lot. And how they integrate with a lot of brokers, and they're getting better at that stuff. So it's pretty cool. This is an example of like a 1 to 3 risk. So I'm risking 3 to make 1, which is not actually it. This is just like an example, but it's not actually how you would want to do it. But yeah, that's that. Target calls and puts. Yeah, I think that's how a lot of people. No, manipulation. I agree. Now, obviously, when you're trading futures, you're going to have to look at the wicks, and the wicks is where you can get faked out. You can get shaked out on this, stopped out really easily on the wicks. So if you're going to trade them, right, I think the micros are best to start, obviously, and depending upon the size of your account, and then looking at the 5-minute, 15-minute charts, big picture, so that a wick is not going to stop you out. It's not a big deal, in the grand scheme of things. So I think it's great. You got to have a style that adopts, and obviously testing things out, you'll get a good feel for it. But it's very easy to be looking at, SPY calls and puts or whatever option. And then you're sitting there and you're like, oh, the options, or whatever, they're I'm up, I'm down, I'm this, I'm that. And the next thing you know, all of a sudden the option moves to 20%. And the stock didn't move nearly as much as you thought, and now you're down huge or you're up huge, and it's like confusing, right? A little bit sometimes, because you can't control certain things that happen. And this is just trading price action. Like, I think we're going up or down because of this pattern, this setup, or this or that, and that's it. You don't have to worry about. You've got fees, but no worrying about the Greeks and all that crap. I know. I don't get me wrong. I'll still be playing options, but yeah. The leverage is pretty cool too. So, all right. Well, I guess we'll just keep this on until it ends up taking me out, either for a gain or for a loss. So then we'll wrap things up. But for the most part, this week, to be honest, we go back. Let's look at the Robinhood. This week, I think it's up. I filmed the video for just before I got on here for the 100K or Trading Stocks $100,000 series. I filmed that just before, but look at this. You're at $300 up on the week, pretty good, 6% week, I guess. I guess silver helped because silver finished at lows on Friday last week, so silver helped. Labu Soxal did decent. TMF did not. JEPI was up, so everything except TMF was up. And then I think I had some covered calls, so I guess it adds up a little bit as the time goes on. I'm really excited to see. Next week, we can probably get, if we refresh this, all these calls should expire, right? Give it a second. Boom, boom. No, they haven't expired. Well, they technically are expiring, but they're all going to be wiped off this board very, very soon. I have a TQQQ put. Only option I have on the Robinhood is a TQQQ put for next Friday as just a small mini hedge. That's it. Not even really a hedge, to be honest. It wouldn't do much, is all I will say. But that's the deal. Look at that. We got close. We got very close to that take profit. I guess now I can move the stop loss up. Let's look at this. Move the stop loss up just under those wicks. Now we're up $2. Look at that. I mean, that the thing about that I'm really excited for is to kind of fully drop the FOMO, whether you realize it or whether I've realized it or not over the past like year and a half. I've had just like major FOMO because I realized I have just not had the ability, like I've literally just not had the ability mentally to release myself from always being in something in the Webull account, which is something that like I know has been a problem, and like I've gotten, I think I'm finally, turning that corner there. And saying like, no, like I am going to sell everything every Friday or every, night at the close in this account. And that's it. It's going cash every night. There will be nothing that I hold. And it's a fresh slate every day. And it allows you to completely, or to have, not completely, to have a much more objective look at each day, which is so much better if you're going to play, let's say a small account, or I'm telling you guys, like I could see that already just today. So here, or this week in the small account. Notice this past week in the small account, we had 4 green days, one red day. I mean, today's red day wasn't even that bad, and it just was 3 red trades. It wasn't like it wasn't like one trade took me down that much. But you can see it there. Why? Because I pretty much cashed or cleaned out the Webull on whatever day and said, okay, I'm done. Let that settle. Let the money settle, and then I'm going to transition that to a cash account. So it's got to wait a week and a half. So I wasn't looking at it. So when you're not in swings, when you're not, hoping things go up based off of your past analysis, you can sit there and have literally no bias. Say, okay, what's the price telling me today? Like, what's the key spot for today? Do I want a short, long, whatever? And it makes it so much easier to then take those individual plays because of that. Even still having some exposure in the Robinhood, right? Because you can still have the exposure here and not have to worry about it, but I'm not in any options, right? I'm selling options and I have like little hedge options, but like all these other positions are all shares. So it's cool. How can you not have some? Oh, no, I mean, it 100%. No, yeah, it's not easy. I still will you're always going to have it, I think. But it's a big, and FOMO is not necessarily as what everyone thinks. Like, I'm not even looking at FOMO as fear of missing out on something that's running up. Like, it's just literally, the thought was always in the past, well, if I go all cash, then what if there's this tomorrow and I have to, it's like, who cares? Like, it doesn't matter, because there could be a setup on Monday that is really, really nice, that's clean, that I can look at and say, this is a setup that's good 2-to-1 risk reward, maybe it's 3-1 risk reward, whatever the number is. Take it. Works out. It's something that I've seen before, and it pans out beautifully, and it's a solid gain. And then you're sitting back and your account's going in the right direction, rather than having stuff that you can't really control. Obviously, you can control your stop losses and take profits on swings, but you can't really control that on an intraday basis. It's the market. It's going to control it, right? And then have that mentally, right, be in the background of like, the accounts, I've done some good stuff, but the account's down. This kind of sucks. Like, that is, that is the most draining thing that you can deal with, and I've dealt with it for months. But we're still flagging here, technically, on this. Yeah, facts. No, I mean, I think that's a huge piece, and like I've said before, and I think that it sounds dumb, but you don't realize it till you realize it. Oh, by the way, this is the S&P's biggest weekly gain since June. Let's check on the weekly chart. Let's go to SPX. Go to the weekly. Is that true? Yeah, look at that. So funny enough, right? We ended up holding that 200 moving average and bounced huge. So we're let me snap right back to the upside there on that 200 moving average. But I was saying before, is when it comes down to the different styles or aspects of trading, right? There's swing trading. There's investing first. Everyone probably understands investing. Pretty straightforward, right? There's investing first. Then there's swings. You might get into swing trading. Well, it's like, I can actually make money off of, moves that are, happen over the course of days and weeks and make a few extra percent if I'm good on my swings. Like, yeah, in theory you could. And that's what you get into. And if the market is very directional, whether that's long or short, and you have that directional advantage or bias going into the swings, you could do very, very well as long as the market stays that way. And hence how a lot of people did very, very well for 2020 through, 2021, and then have been the exact opposite really for the second half of last year and into this year. But the differences are absolutely massive from investing to swing trading to day trading. Like the mindset shifts and just what you need to be aware of mindset wise, they're no, you can't tell me, and you will never convince me that they're similar. They're not even close, because swing trading and day trading are closer, but even that is not close realistically, because you learn, and I'm sure a lot of people come up when they go through, okay, they see people on, social media, the big investors, those people, great. They might be the ones who got you into the financial space, the world, right? The Graham Steffens, the big names, right? That do tons of followers and subscribers and have some cool stuff to say, like really good stuff. And if you listen to them just long term, like, yeah, you're going to be fine. But the thing is, they are absolutely not someone to listen to or care about when it comes to, right, trading. But the thing is, people think about that and they have that as like their big picture approach. And then they bring that into the micro view of what they're doing on the day-to-day basis. And it just completely throws you off. And I fell for a lot of that stuff too, because I was looking at the macro view. I was having this macro view cloud the micro, and that's even with a macro bear market, there's going to be rallies. There's going to be times where you can get blown up, even if the macro is going to go lower, right? We're going lower in the long term. In the short term, you can get blown up, right? Blown up off of that. But, it takes getting blown up to actually understand it and realize it at the end of the day. So, no near fast enough to day trade. Even when I try, it turns into more of a swing. Yeah, I mean the thing with the day, that's the other thing too with day trades, right? Now you can look at day trades. I mean, people can look at them in different views. You can look at them as scalps, which would be pretty fast in my view, be pretty fast, or you can look at them in terms of bigger picture, 15, 30 minute, 1 hour charts. And if the move happens to be pretty big as you're looking off of those, then take the gains for a day trade, even though the idea could still be a valid swing, right? Overnight or for whatever, right? So like you can look at it both ways, but either way, I think it's important if you're looking at certain levels, right? It's important to have the ability to day trade, because if the level breaks or the target's hit that same day, you don't want to be sitting there saying to yourself, well, I don't have any day trades today, or I don't want to take a day trade, so I'm going to hold overnight and hope and pray that it goes up. Guess what? You're not going to sleep, and you're hoping and praying, and then the next day might work, but there will be a time where it doesn't, and it blows up. And so it's like, do you want to deal with that too? Probably not. My guess is probably not. So, do you think we have bottomed out? I think it's possible for now. I don't necessarily know that this is the bottom, right? But I think it's possible for now that we put something in. If we go back to that S&P chart, right? I'll go back to that SPX. My biggest concern is the 10-year. I'm very concerned with the 10-year. However, this week, if this correlation keeps up, where the 10-year has been kind of going up and the market's actually held up pretty well and actually rallying now, then we very well, as much as it doesn't look very much like capitulation, like this was almost their capitulation, right? It was about a 10 point or about a $10 SPY move, right, from that level down on that CPI. And nothing, maybe, in a perfect world, we would have liked to look for like, a little bit of a bigger capitulation type of event. We didn't really get it, but it's possible for now. We've potentially put in something here. We have some concerns though. Next week is a lot of big tech earnings, so that's going to be a pretty big driver of the market. Market seemingly absorbed pretty well this week. A couple stocks, no one huge, but a couple decent names that were up there. The thing is, last big tech earnings was like right in here. Right. So we actually rallied really, really hard during that span of time. So I don't expect it to be an easy money short like a lot of people expected last time, which I'm not seeing that from my gauge of social media sentiment. I'm not really seeing a lot of people thinking that this is going to be easy money short next week. So I think people have learned their lesson from last time. But it's very possible. I mean, we look kind of similar to what happened back in June, July. I mean, we had a lot of chop back in here, a lot of ups and downs and choppiness left and right. And what happened now, right? Since late September, we've been doing the same thing. Ups and downs, choppiness. And if we kind of just get past this earnings cycle and sneak to the upside and kind of grind higher, we might be headed in that direction. Now, you got a Fed meeting on November 2nd. The Fed, for those who are for jumping in now, not the Fed, but the Wall Street Journal reported this morning that essentially members of the Fed are debating the size of future hikes. In doing so, meaning that like they think that they need to pause or potentially drop some of those hikes because that they want to kind of see how the economic factors and how some data plays out over the next few months, because they think that maybe they may have done enough or done too much, and they don't want to do too much and then have to make up for that a year later, right? So this is where Powell is going to have to, again, walk that fine line, right? Where it's like, we don't want the market to go up because it's not going to help get our inflation down. But if we say we're going to pause, market's going to go up. So we don't want to say we're going to pause, even though that they might have to actually do it anyway, right? Eventually. So it's going to happen at some point, or eventually pause rates. But we don't want to let on to that we've maybe caused some bigger damages to the economy that won't be felt right now. Maybe they're not seen right now, but they're starting to be seen a little bit, and then they could be seen bigger next year, right? So they don't want to lead on that they've done something wrong. So they're kind of walking this weird fine line. And I think today, right, could have been a little bit of that market. Number one, seeing the article this morning, by the way, for those who were not aware, this morning was not looking good. Pre-market hours, we were looking to gap down. Like SPY closed yesterday around this 365, 366 area. We were down here like under 363 in the pre-market hour. So we were on track to have a pretty nasty, or to start off at least decently red. But that article comes out in pre-market, and we immediately bounced up, went green, pulled back at the open, and then ripped the rest of the day pretty much. So that's essentially what happened today. But yeah, it's an interesting, like I was saying, it's an interesting situation that the Fed is in and Powell is in, right? It's not something that, I don't want to be the one making the calls here, because again, there's going to be backlash no matter what, and it's not going to be perfect, right? Something's going to go wrong at some point. Whether it's markets going up and you don't want them to go up and it makes it harder on inflation, or you over tighten and you're going to have major problems later on, something's going to happen. We can almost, I don't want to say we can guarantee, but we can almost bet on something bad's going to happen, right? So that's where we're kind of at. Best part of cash account is no P. No, yeah, 100%. So for those people who, yes, if you are looking to take any bit of active, add any sort of active style to trading, please be on a cash account. Number one, you don't need it. You don't need margin unless you, well, first off, if you need margin, you probably need to be at the level where you have 25K anyway to use it, to be confident in actually using it properly, which still is risky, but use a cash account, and then no PDT. So, you're in a trade today, and by the end of the day, you're like, you know what? I thought I was going to swing it, but I don't like it anymore. It's not looking as good as I thought. I'm going to get out. Get out. You don't have to worry about it. No, there's no penalty for taking the day trade, none of that stuff. The cash will settle in a day or two, and you're good. If it's options, it's next day settlement on Webull. I think Robinhood too. Maybe not Robinhood. I'm not sure. I know Webull is next day settlement at a minimum. Many brokers are at that point now. If it's shares, it's like 2 day settlement, which is not that bad. It's not that bad. So next week's big for Qs. Yes, I think it will be big. Yes, it will. We'll see the midterm bump. I think so too. And plus, here's the other thought too, that they don't want things to look bad going into midterms. This is the speculation everyone has. They don't want things to look bad going into midterms. Number two, seasonality, right? November, December is a pretty strong seasonal time of year for the markets. And on top of that, if, as some are projecting, if it's maybe more of a red push through election season, that is seen as maybe a better thing for the market, the financial side of things, right? So maybe the market actually likes, a red push in elections, right? So that's the kind of thoughts we're going into that. Selling stocks, T+2, options, T+1, yes. Never to margin, I'm going to say. I am actually on it on the Robinhood, but it's actually funny. I was looking at the rates. And to be honest, if I was thinking about it, I could go out on margin on Robinhood and make more money by just the dividends in JAPI each year than what the margin's going to cost me for the entirety of the year. Now, obviously, if you're going to go in on margin, that's a risk. Don't do it for options. But if you're going to do it for a stock or for shares, the way I can kind of almost justify it is that I'm getting paid more in dividends from this than what the margin's costing me, you know? And on top of that, if we make big moves to the upside, I'm going to be selling stuff and then I'll be out of margin. And also Robinhood gives you like $1,000 of margin free if you're paying like the $5 a month for the Robinhood Gold, which I think I pay for. So it's like, it's not that bad in the way I see it. But generally speaking, you know, well, not generally, I've never actually used margin, I don't think, on an individual trade. I don't think I ever have. And you don't need to. Like, there's so many, there's so many ways to get leverage. Options, future, like there's a million ways to get leverage without having to actually like put your entire account on the line, you know, or more than your entire account on the line. But then again, if you're going to trade a 3X ETF or you're going to trade an individual stock and you're going to trade shares, you know, going into margin for a day trade is not that risky because, you know, you're in shares. Like, how much could the shares realistically move? If you're in a penny stock, different story. If you're in like Apple and you want to get some extra exposure to Apple for a day trade, and you think Apple's going to go 30 cents on this little move, and you're like, well, you know, I don't have enough money to buy, you know, 300 shares, so I'm going to go into margin for a couple hundred shares, or let's say, you know, I can only buy, you know, whatever many shares, and I want to go into margin for the rest to make that move worth my while. Maybe it makes sense, but yeah, it's like, didn't play options, I guess. So yes, then you get into trouble that's where you get into a lot of trouble actually. If things go south and now you're in trouble, you know, but a lot of these brokers won't let you go that far. Robinhood is pretty good where if you go under a certain, you know, level in your account, they'll pretty much tell you they'll either liquidate for you or they'll tell you, hey, you got to liquidate something because you're in too much margin relative. So brokers are pretty good about it these days. Yep, margin call can kill you. Uh-huh. Yeah, if the dividend's more than the interest, yeah. But also, I'm not intending to be on margin all year. So that's the way also I see it. Like, the Labu, Soxel, and TMF, well, like and even the silver, like it's very possible that any of those 3 or 4 positions that I have on top of like my core, like, you know, dividend position in that account, if we go up, if we get a big rally, I'm going to be selling a lot of them, like no matter what, you know. And if the rally is slow or we kind of slowly build, then, you know, whatever. If we go lower, then obviously, you know, I have to cut something off when I hit support. Well, silver could be that one example of silver. If we go below a certain level, I'm cutting it off. So that's how I can kind of minimize or get out of the margin, I guess, on those. But it's not, I mean, you know, it depends on how you view it and see it. Let's take a look at this for next week. So next week, Chicago Fed National Activity Index. Got the hiccups, man. U.S. Manufacturing PMI. U.S. Services PMI on Monday. Home Price Index, Case-Shiller on Tuesday. So I got some home price stuff on Tuesday. Consumer Confidence on Tuesday at 10 a.m. This consumer confidence at 10 a.m. sucks because, again, be careful. This is a good site. marketwatch.com/economy-politics-/calendar. Just pull it up because you get to just to see what's coming out. This consumer confidence at 10 a.m., that's after the open. So there should actually, or there many times is a reaction to that number that comes out. And so if you're in a position, you can actually get screwed like I did if I didn't have that, I would have saved my ass, you know, a decent chunk of the small account last Friday. But I was in a Michigan consumer confidence popped off and it just plummeted, you know, in seconds it plummeted. So I was like, oh, well, that sucks. But if I, you know, was aware, wouldn't have had a problem. New home sales. This is going to be fun to see on Wednesday. That's going to be pretty bad. Here we go. Oh, yeah. I forgot about this. We're going to get GDP. We got GDP coming out now. Oh, we have a lot. We have a lot next week. So on top of everything we got going on from earnings-wise, Thursday we have GDP. So in the morning, 8:30 a.m., we're going to get now this is the first estimate. So they come out with like 3 estimates. There's like a first estimate, a second, and then like a third final. So we're going to get a decent feel as to the next quarter. This is going to be third quarter GDP. Yeah. right? Third quarter GDP is coming out, first estimate on Thursday of next week. So, they're expecting, if we go to the Atlanta Fed, I'm pretty sure they're expecting a pretty positive number. Let's see. Yeah, they're expecting a 2.9% positive. So what this is going to tell us essentially is that, hey, we're not in a recession anymore. We technically had a two quarter in a row negative GDP, first and second of this year, which is a technical recession, but everyone's like, the job market's not that bad, so we're not going to count it. Really looks like we're going to probably be in a recession next year, and that will be the actual recession that will probably also align with a hit to unemployment, job numbers more substantially. That's where I think a lot of people are looking. So that's where we're at. Afternoon boys dead as hell after the gym. Yeah, I feel you. I ended up skipping out today. Was not feeling it, but potentially later today, maybe tonight. TMF great. Yeah, the thing about TMF is that you're you're betting on, I don't want to say you're betting on the Fed screwing up, but like essentially what you're betting on. And so in theory, TMF will do well when the Fed pivots. And if the Fed pivots, that's step one. Step two, if CPI start to come down hard next year, TMF will do really, really well. I just think that right now you're in that capitulation for bonds. So who knows how long it lasts, In reality, you might want to leverage ETF, you could be getting blasted. But then in 2 weeks, it could reverse the entire thing, right? So just, that's kind of how I view it. But I'm not looking at it in a day-to-day. I'm looking at it as a month to quarters to, big picture. So, and I'm not expecting anything really until into early next year. If we get into early next year and CPIs are not coming down, well, then I got to rethink the idea. But we have to kind of start lapping some of those big CPIs for me to rethink it. By the way, this is about to hit our take profit. So now I can move the stop loss. So this is kind of fun. I mean, this is just the paper trading platform for now, but I got the live futures account coming next week. So we'll see if we can mess around with it. It looks like, yeah, it did. It's going to hit that. It's like tapping that target. We'll see if we get taken out. Job losses. No, they're going to come. It's not going to be good. It's not going to be good. Not at all. Port's almost 4%. What did mine? Let's see what the Robinhood did today. This week it did 6, but today it did 4.5. There you go. It was red earlier today too. And I had puts overnight, and I sold them. I sold one of those puts overnight. I kept one just as a hedge for next week because I have it out to next week. But I sold one. I guess if I sold both, I could have actually squeaked out a few extra bucks. GDP before midterms being positive. Yeah. No, I honestly haven't gotten too deep into like why is this one so much more going to be so positive versus the past two that were negative. Like I didn't really get too deep. Meanwhile, the Atlanta Fed, for whatever reason, was projecting it to be a very minimal positive GDP reading just a few weeks ago. And then now they're like, well, it's going to be way up there. So I don't know how much credibility they really have. The consensus is like, just north of about a 1% positive number. Whereas the Atlanta Fed's like, hey, we're going to come in at like 2.9. Like that seems like a lot. Yeah. The bond situation, like you can think of it as catching a knife. Sure, but it's a macro picture view. I'm not like, I don't care about like tomorrow. It's not a technical trade in my view. There it is. Hey, take it out. So that was a fun little experiment. In reality, I should not have held that the whole way, but it was fun to see. Made like $20. Probably should have gotten stopped here, which in looking back would have been a fake out. But that was the deal. So it was kind of fun to trade the futures a little bit, but hopefully the live account is ready to go for Monday. If not, maybe some point next week you'll have it. But government spending impacts GDP, maybe not. Yeah, I don't know. And everyone was saying it had to do with supply chain and all that stuff. Maybe. So we'll see. But with that said, I'm going to wrap things up here, guys. It was awesome hanging out on a Friday afternoon, but pretty calm day. Best week in the market since June or July. So it was pretty good. Pretty solid. Look at that. We actually had a much bigger move to the upside there. So the melt up this afternoon is kind of what we kind of saw. I mean, if we just zoom out, after that article came out this morning, we pretty much just shot straight up all day. Little pullbacks along the way, but pretty much just straight up all day. We're up into the range of this week's highs. Nothing crazy, but pretty much up into that range. So we shall see if we zoom us out a little bit further. Pretty solid week. We got, what do we got? We have this 3,800 is going to be key. Beyond that, 3,900 is the next spot. So with that, what stocks in Robinhood? Yeah, really quick. I mean, I'll cover it. Well, I cover every Saturday. We kind of go over it, but yeah, I'm covering it. That's why. Let me get myself out of the way. So we have JAPI, which is kind of like our dividend solid beast that is like half the well, that's like most of the portfolio. I am on some, I'm not on some, I'm on a decent chunk of margin, but as things play out, I take stuff off and I won't be intending to be on much margin. Plus Robinhood gives you like $1,000 of margin for free. So it's like, kind of like, why not use it? Especially if you're going to get dividend, especially if you want to buy the dip / you're going to get dividends from it. Like it's not a bad idea. Labu, Soxel, nothing huge position wise there, but those are 3X ETFs, biotech sector, and then the semiconductor sector. Two sectors have been hit hard as hell. So in theory, those are decent bounce sectors into, next couple months, next year, whenever the next bounce comes, who knows really, I don't really care. AGQ is a leveraged silver play. I'm looking at silver as long as silver holds $18, which it has done this week. I'm staying long that. So we're in there. And then TMF is a long, it's TLT's 3X ETF. So that's where we're at across the Robinhood. Nothing too crazy there. And then these are all covered calls that were sold. They should have all expired. I'd say it's the 21st. These are all, they should be probably gone now. No, they're still there. Robinhood hasn't got rid of them yet. But these are all going to expire worthless, except this one. This is a put that I have as a small mini hedge into next week. But that's the plan. And we're going to hold out in there. And then we got the Webull accounts all cash. The small account is up this week a decent little bit. Nothing crazy. This small account was up this past week, I believe. If I change it to this week. Yep, $33. Nothing crazy, but just kind of doing its thing. It was a pretty good week in terms of days. Obviously, 4 winning days, 8 winning trades, 4 losers. Profit factor was decent, but the risk reward is still not the best. They need to improve on that. But it's, again, like we've been saying, it's kind of tough on a small account to do this. And as you grow the account, it gets a little bit easier to do that. It's still obviously sticking to the rules. But with that said, thanks so much for watching, guys. I will see you in a future video or stream. Have a great weekend. Sunday, we'll do a stream a little bit earlier than usual because I'll be at a concert at night, but kind of weird Sunday night, but that's what we got. So peace out. Enjoy the week.